It's about that time of day again here, boys and girls. Welcome back. Welcome back. Joseph James here, School of Trade, Sideways Markets. Welcome back to your nightly newsletter for May 15th, 2014. Is it already halfway through the month of May? You better get that sunblock ready, get the barbecue grill cleaned up, the boat gassed up. Boy, it's almost summertime. Before we go into that, though, we get an exciting newsletter in store for you this evening. Are you with me? Boy, we've had a fantastic week this week. First things first, tonight on the newsletter, we'll talk about what happened in the markets today. Russell and crude collapse. Gold, get a little glimmer of some price action on gold, but gold goes sideways. We had a whole slew of news that came out today. We'll talk about that. And of course, you know, the good stuff. I'm going to make you wait till the end of the newsletter here tonight. I've got some excellent opportunities for you on our favorite futures markets, so stick around and we'll grab some charts. Now, before we go into the newsletter content here this evening, I want to remind you, if you're not watching the newsletter on our blog right now at sidewaysmarkets.com, make sure you get over there. There'll be a link below the video if you're watching this on our YouTube page. So make sure you guys click the link right below the video. If you're not watching this on the blog, get on over to sidewaysmarkets.com because the good stuff is over here. Now you can tell, like you can see here, below the video here tonight, there is a link here that says click here to download today's newsletter charts and commentary. Just like it says, if you click that link, you can download all of the charts that go along with today's video. Why do I take the time to do that? That way you can download the charts, you can have them right next to the video, and as I'm going through them, you can prepare those charts for your trading tomorrow. And if you're smart, you'll come join me tomorrow in my live trade room, 8 a.m. Eastern Time. We open it up, and we're going to trade these levels together in real time. So download that copy of the commentary and all the charts by clicking the link below the video here tonight. And don't forget also, in the upper left-hand corner, I have a special free pass for anyone who wants to check out my live trade room as a guest. That's right. I'm going to open up the live trade room in the afternoons, each afternoon. I've got a special free pass for you. You don't have to be a member. We'll invite you in the afternoon, and I'll show you how we trade in real time. That way you can see for yourself how easy this stuff really is. And then, of course, we can't forget about this. If you want to get this newsletter sent to you every evening like clockwork, make sure you register for our nightly newsletter mailing list. That way you've got the newsletter sent to your email box. Alrighty? Now that you know more about what the deal is today, again, make sure you download a copy of those charts. So pause the video, download a copy of the charts, and don't forget to register for your free pass to our trade room and as well as our nightly newsletter mailing list. Alrighty, let's jump right into it here this morning. Markets were busy here today. We're going to start out with the old black gold. We'll take a look at what happened today. But you know what? I think maybe we should talk a bit about the monster short that we called last night on the Russell. Are you with me? Are you with me? Now, I'm not sure if you were paying attention to this, but we called that low to the tick. This was 24 hours ago. 24 hours ago. Last night's newsletter, we talked about the selling opportunities on the Russell, and what did I say last night? I know, we've been nailing this stuff this week. Winner after winner after winner on this newsletter. Last night's newsletter, my exact words, selling short on the Russell. I gave you guys some spots to look for the short opportunities. Didn't get anything to pull back to it, but I also said any new lower low and where we selling down to. You got it, 1078.5. We literally took this to the tick here today in the trade room. A fantastic trade short here on the Russell. If you were with me in the trade room today, we made money in the trade room as well. Whether you took it off the newsletter or you're with me in the trade room today, everybody cashing big paychecks, selling with those wave patterns all the way on down. So guys, don't say I didn't warn you about that one last night. That was easy money here today on the Russell. And again, don't take my word for it, boys and girls. You can't believe everything you see on television these days. Go watch the newsletter from last night, and you will see that chart. I gave you guys the exact target all the way down at the bottom. Excellent stuff on the Russell. And, of course, we couldn't forget about the old black gold here. right? Couldn't forget about, the gold, right? The yellow metal. Gave you 2 opportunities here to buy the gold here this week. You had Wednesday's buy and then Thursday's buy. That buy, again, my exact words last night on the newsletter, buying at the lows of the wedge, using the zone at 1293.4. And here you go, bouncing off the zone. So if you remember, earlier this week, we gave you the buy at 1290. Later on in the week, we gave you the sell at 1309, and now here we are, bouncing off the low at 1293.4. Guys, it's tough to make this look any easier, right? I mean, I give you this stuff 24 hours in advance. All you got to do is pay attention and follow along. And remember, at any time you need help with this stuff to actually profit from this stuff, come join me in the trade room, and I'll show you how to do it in real time. So we had some great opportunities on the gold, awesome short on the Russell. We're still waiting on crude. Crude is pulling back right now. And speaking of crude, here's what happened today. Another narrow day. Boy, another narrow day. Had a very narrow day on Tuesday, narrow day on Wednesday. Here we are again on Thursday. 86 ticks of range on the crude. A very narrow session. Clearly we're seeing some profit taking after this big run up, which, by the way, we've profited on very significantly. You've seen it yourself on the newsletter. So, of course, we've been looking for buying opportunities on gold. Pulled back here, and now we're expecting for OPEX Friday tomorrow, we're expecting to start looking at some support settle in here. I'm going to show you that on another chart, so stick around. First things first, though, here on crude, 86 ticks of range, opened here at the lows. You'll see here now, clearly something happened overnight, right? Now, we know what happened overnight. Big news came out of Europe. GDP numbers didn't come in as expected. It doesn't really matter what happened overnight, because when I woke up this morning, I saw that we went from the highs, the closing print yesterday, to the lows at the opening print today. See, here's how professional day traders work. We don't waste our time trying to understand why. If we worry about why, we're never going to get the when and the where. You've heard me say that many times before. So while the rest of the world is clamoring to figure out, ooh, what happened here? What made the buyers give up? They didn't give up. They're pulling back. You got some profit taking right now at these highs. It doesn't matter why. All we know is the chart tells us where and when. Chart tells me here at the opening bell, we went from closing at the highs to opening at the lows. What does that tell me? It tells me something has changed. Something between 2:30 p.m. Eastern Time last night and 9 a.m. Eastern Time tonight has changed the market's sentiment from bullish to bearish. Do I care why? No, not at all. Now I know we're bearish, and now as we go lower, we're selling short, using those support levels that I gave you guys in last night's newsletter as our targets. All right? I don't know. Remember this number we talked about last night? It was something like 101.52. That's the level I gave you guys last night to look for a buying opportunity. Well, we haven't turned the corner yet. That'll be coming tomorrow. Stick around. I'm going to talk more about what my plans are for crude at the end of the newsletter here tonight. We opened up at the lows. We closed at the lows. The volume is at the lows. I'm going to say we're bearish here right now in the short term, obviously, on crude. Tomorrow morning, we have to be in mind, I'm keeping a close eye on the prior week high, 101.14. Don't be surprised if we get stuck in the mud at that prior week high tomorrow, if we don't end up going higher here. If we break below the prior week high, Does that number look familiar? All those goose eggs there, $100 a barrel. I know. I can't wait till we get away from this $100 a barrel number so I can stop acting like a broken record for this stuff. But my numbers tomorrow, though, are definitely going to be as follows. If the buyers grab a hold of this, because again, you can't see it on this chart, but we're at some serious support on the anchor chart. I'm going to show you guys that in a second. Here are the most important numbers for tomorrow. 102.65, that's Wednesday night's high. All right, if we rebound here, we're going right towards that high. You know it for a fact. Looking at the 102.65, that's going to be an important one. Very important, though, 101.14. And again, I hope I'm wrong about this, but tomorrow's OpEx Friday, so we may get stuck in the mud there at the 101.14. And it would make all the sense in the world. With the issues going on in Ukraine right now, this crude price is being elevated. And so at the prior week's high, you have to almost think of it like this. You've got last week's range here. Okay, here's last week's range. Little Bob Ross for you guys here tonight, right? There's last week's range. So there's last week's high of day, right? Last week's high. So now we pushed higher, we pushed higher, we pushed higher, and now here we are. What do I do? What do I do? What do I do? What do I do? Right? Oh boy, Putin took his shirt off again. Bam, right? Goes through the hot. You see what I'm saying though? This could go either direction. Either direction. So I have to look at this and say, okay, my prior week's high and the red line, if we get below it, now all of a sudden there's the prior week low. You know what these levels mean, right? That's going to be a price magnet. So watch this prior week high like a hawk tomorrow morning. All right? And keep an eye on Putin too. Make sure he keeps that shirt on. Anyways, as we go lower here, the prior week high, I know, bad crude oil jokes. Bad crude oil jokes here. I got to have some fun with you guys. Prior week high, 101.14. Again, I would expect that to be a sticking point, all right? I don't want to be entering trades to leave that area, okay? It's called a dotted line. Members of mine know better than trying to trade dotted lines. As we go lower here, I've got the 136, but to be honest with you, the one I'm really watching here, yeah, you got it. That prior week open and the prior week close. All right? If we slip and fall here, we know where we're going. 100 even is going to be in the cards. If we bust out to the upside again, I got 102.65. Don't let me stop there, though. I got a lot more information for you on the anchor chart here for the black gold. Let's keep going. Now we move over to the Russell. On good old Russell, one of my favorite E-minis. As you can see here, we are well below the prior week high on the Russell, well below the prior week open and the prior week close. And you can see here, just like I said last night, not sure if you guys remember this from last night's newsletter, but I talked about how if we opened up lower, we'd be going straight to that prior week low. And knock, knock. Here we are, right at the prior week low. This was also that exact same level that we called last night on the newsletter as well. We might just know what we're talking about here, boys and girls. 176 ticks, I'm going to call that typical. Remember, if it's less than 100, it's narrow. If it's greater than 200, it's wide. Anything in between there, I consider to be relatively typical range. Give or take, 102, 105 ticks, we'll call that typical too, right? So I'm not going to worry too much about the details, but between 100 and 200, going to be typical. Closing price, 1092. Definitely got to close here below the 1100, big round number. You can see here we gap down. Now, back up the truck for a second. Remember on crude, hold on, back up here. Remember on crude how we said the closing print last night was bullish, opening print this morning was bearish. It kept going lower, so we jumped on the shorts, right? That's a change in sentiment from one day to the next. It's easy to pick up on, okay? We talk about this every day in the trade room, right? It's called the opening bell analysis. Now look at the Russell. What happened? Closing price yesterday was bearish on the Russell. Look what happened this morning. Gap down. What do you think? Just guess. Just guess. And don't guess bullish, all right? It's bearish, right? It's obvious. So we closed yesterday evening at the lows. That was very bearish. That told me that the sellers were in complete control at the end of the day yesterday. Fast forward 12 hours later, market opens back up, bam, gap down. It ain't bullish, I'll tell you that much. It's bearish. We wait for what? We wait the first 15 minutes, the first 3 5-minute candles, bearish, and we're off to the races selling short, right? It was easy money today in the trade room because of that analysis. Moving forward here now, again, opened at the lows. That's bearish. But now, look what's happened. Follow the bouncing ball. Just like I said last night, the lows down here were going to be public enemy number one, right? They were going to be on guard. Remember how I showed you guys that chart here before? Where was it here? Where was that chart? There it is. Remember I showed you guys this chart last night? Remember how I talked about we had that 88.9 to 87.1 on the 4 hour? Yeah, well, look what happened, right? Once again, they defended this bad boy with a vengeance. You can see we did break down below it. We broke below it, but bam, it comes right back up. Clearly here, they are guarding this 200 moving average. Here's a daily chart on the 200, and you can see there's your 200 moving average right there. And again, whoever's out there playing this yo-yo game right now is doing a great job at it. Now remember, traders, we got to think like traders. How does a trader play this? If we see some big money buyers right there gaming the system, well, we're going to game their game. So now that we picked up on it, now we're buying that low. So every time they go down, we know they're protecting it. We're buying it again. All right? This is easy stuff, guys. This is easy stuff. I told you about it last night. Come out and see me tomorrow in the trade room, and I'll discuss it more. So we know that we open the day today bearish. We go down into the old abyss, right, down here below the old 87 area, and then whammo, right back up. And you'll notice now we closed at the highs. So going into this evening, we are bullish on this Russell according to the VIP chart. But will we see more of that on the anchor chart? We're going to have to wait and see. Let's keep going. Most important numbers for tomorrow. Most important numbers for tomorrow. I don't have anything down bottom here, as you can see. Nothing down bottom. So most important numbers for tomorrow are going to be the prior week levels. We've got prior week close. Obviously an important one here. Prior week open and prior week high. Tomorrow's OPEX Friday. So don't be surprised if we get stuck in the mud around any of these levels. All right, little bit more difficult until we see that anchor chart. Hold on tight. We're going to grab a look at the anchor chart here in just a few moments. Now, last but not least, from the Russell to the gold. Now, gold had a relatively good day today, relatively wide range, 130 ticks. It's been a while since we've seen 3 digits. As you can see here, it's been nothing but sideways, slop and chop, just back and forth. Now, remember, we still have this range we're trading inside of. Okay, remember, this range hasn't gone anywhere. So we're going to use that range here as our guide. And you can see right now, boy, we are right smack in the middle. So my strategy right now for gold hasn't changed all week. Buying lows, selling highs. And as you look at this chart here right now, clearly we've got some prior week highs up top here. I don't see that being a factor for tomorrow. What I do see being a factor, though, is the prior week low, 1284.8. I've been talking about this all week, right? We're looking for a bounce off that low. If it torches that low, then we'll start selling short. But I'm expecting this to be a bounce off that low. Tomorrow's OPEX, again, don't forget. So we may get stuck in the mud around these places, the prior week close and the prior week low. My eyes are on that prior week low right now for gold. As you can see here, relatively typical trading range, although it was about 3 times the size we've seen so far this week at a gold. We had opening price at the low, closing price at the low, volume at the low. I would say we're just a teeny weeny bit bearish right now. And of course, I've got my eyes on the prior week low right now down here at 1284.8. But hold on tight though, because I got some more information on that in just a few moments. So that takes care of what happened today. Made some great profit buying those lows on gold from last night's newsletter, selling the heck out of the Russell today. Nailed that Russell. What about tomorrow? What about tomorrow? Now, we've been talking about this thing they call OPEX all week. And unless you've been living under a rock here with me, what did I do there? There we go. Unless you're living under a rock here with me, you know that tomorrow was OPEX Friday. Wednesday was Wacky Wednesday. Thursday was Thirsty Thursday. We had all this great news today. Philly Fed was a big disappointment today, but that's about it. Tomorrow's OPEX. Now, let's first talk about the news we have scheduled for tomorrow. 8:30 housing starts, 9:55 consumer sentiment. Now, typically on a Friday, you're going to be in early and out early. Typically on a Friday, and I say typically because I'm about to tell you why tomorrow's going to be different, right? So stay tuned. Typically on a Friday, we're going to be trading until about 11 a.m., right? Maybe to 11:30, depending on how the price action looks on a typical Friday. Tomorrow, though, is OPEX Friday, which means 11 o'clock now turns into about 10:30, 10:45. All right? I'll say 10:30 just to be safe. I have an alarm clock on Fridays that goes off at 10:30 and reminds me to get the boat gassed up, to get the barbecue grill clean because it's almost weekend time. So tomorrow after 10:30, if anybody's trading tomorrow after 11 o'clock, it's going to be out of necessity or ignorance. All right? If anybody's trading tomorrow after 11 a.m., it'll be out of necessity or ignorance. And that means either people don't know why it's dangerous or they have no choice. And that's dangerous, right? It's dangerous here because tomorrow after 11 o'clock, the only people trading are ones that are in deep, deep trouble with the boss man or the client. All right? So you don't want to play with desperate people. And those are desperate traders after 11 o'clock. You're not going to see a lot of reality tomorrow after 11 o'clock. OPEX Friday, 99.9% of the time, is going to be a flash in the pan early in the session. You'll have a great European session, but the London session will be fine. The U.S. session, though, between 8 o'clock and 10:30, you're going to see quick price action. It'll be fast because traders are going to be doing their work and getting the heck out of the way before OPEX slows everything down. Luckily, this only happens once a month, so we don't have to worry about it too much. But tomorrow is OPEX Friday, so we need to be on our best behavior tomorrow, right? Watch that clock. I would also assume that after that 10 o'clock number, 9:55, comes out, that's when you're probably going to get the best price action. All right? I'll repeat that. We got 9:55 a.m. news. I don't know why this is the case, but on Friday mornings, usually after we get that consumer sentiment number, usually that's when everybody starts hitting the exits, and usually that means short covering rallies, profit taking at the highs, right? So if a market's at the high of day, tomorrow morning at 10:30, be looking for that reversal or take your profit. So we usually do get the best price action after that last news event at 10 o'clock on Friday mornings, irregardless of OPEX Friday. All right? Be ready for it. Be ready for it. OPEX Friday is not the day to be testing out new ideas, testing out new strategies, or going live on your trading account for the first time in your career. All right? So be careful. And again, if you need any help along the way, tomorrow morning, log into my trade room, 8 a.m. Eastern time, and I'll walk you right through everything. I'll make sure to keep you safe tomorrow morning. All right, gold futures. Here's my anchor chart. Is this the same chart from Monday? Maybe Tuesday? Maybe Wednesday? Thursday? Yeah, it's the same exact chart. We haven't seen very much out of gold here. As you can see, we are stuck right now in this rut. We got all these key moving averages piled on top of each other right now, very narrow, very consolidated, and you know me, guys. I'm going to draw the trend lines off the lows, the trend lines off the highs, and my plan hasn't changed a bit since Monday afternoon. What am I doing? I'm buying lows, I'm selling highs, I'm buying lows, I'm selling highs until this stops working. Right now, I've got buy zones here at 1293.4. Yes, that's the same exact buy zone from last night, 1290 to 1287. At the lows here, 1281 to 1277, 1278, 1273, okay? So buying those lows. Up at the highs, selling 1305, selling 1309, and selling 1317.9. Now you know. Oh, and one more thing. Who remembers what Mama says? I know my members know this. What does Mama say? Mama says, stay the heck out of the middle, right? Don't fiddle with the middle. So be aware of the middle, and I know this is tough because you're going to want to buy this after it starts rising, but you're getting in trouble there. Buy the lows. Take your profit at the highs. Sell the highs. Take your profit at the lows. And don't you be fiddling in that middling. All right? That's your gold here for today. And, of course, move from the gold here to the mighty mini Russell. Now, as you can see here, made that monster drop just like we had anticipated, right? We don't use that P word, predict. Just as we anticipated for tomorrow, get the nice big, or for today, we get that big drop off those highs. Now, if you remember, we called that drop on Monday's newsletter at the 1126. So we called this baby from 1126 all the way down to 1078.7. I know. Every once in a while, we do something right around here, all right? Tip your waiter on the way out. As I zoom in here, you can see I've got a couple key levels here for shorts right now. Now, there's a couple different things we want to keep in mind here. First of all, we know we have that major support down here, right? And I know we keep repeating this, but someone out there, right, not sure who and don't really care who, somebody's got an eye on this thing and they keep buying this bad boy. Now the Russell, don't forget, the Russell is a relatively thin market, right? It's not even as voluminous as crude oil. So we're not talking about the S&P here, right? We're talking about a couple thousand contracts can send this thing into a tailspin. So if anybody's thinking about selling this Russell, they're going to have to get through a few key market makers first, from what it feels like right now. I'm not going to try to reinvent the wheel here. As we go lower, I will be looking for bounces off of these levels. If for some reason I'm wrong and it just torches this thing, there's going to be a massive sell-off. I can just assume that there are tons of stop losses that are tucked just underneath. If you go to your Russell Daily right now, you can see here we have this area right here, right? 1073 to 1067, all right? That area right there, again, those numbers are 1073.7 and 1067.5. That's going to be the line of defense here next. And what's likely to happen is if we get below that area, right, now you're going to start seeing chunk, right? All these black boxes, all of these HFTs, they're going to trigger those. You have a lot of stops going to be triggered there. So we are probably going to see a pretty darn big sell-off if we see a bloodbath tomorrow morning on OPEX. I don't think, to be very honest, I don't think we're going to see it tomorrow. OPEX is usually not the day when that happens. Tomorrow is more likely to be a range-bound session after this big monster session we saw today. We know the 200 moving average at 1098 right now. We know that 200 moving average is going to be the big ticket right now. All right, that's what clearly all the small cap traders are watching right now. All right, so we're going to play this carefully tomorrow on OPEX, but we know that we have selling opportunities because clearly we're bearish. I mean, there's no doubt about that. We're bearish, so I'm looking to sell the 23s, sell the 069s, sell the 98.5s. Can anybody guess where my profit target would be on this? Let's see. Yes, you're right. Down below is there, 1078.7. And remember, that was 1073.5, right? That was the level below it. So the next target will be 73s, all right? 73.5, right? No, 73.7. 1073.7, that's going to be your next target down bottom. Alrighty, so 78.7, 73.7. There's a relatively big difference in those two, but those are going to be my targets for tomorrow morning. And again, I'm watching this low here. If I get down to those lows, I am going to be looking to buy those lows again. It'll be a counter trend trade, which means I'm taking my profit quickly, and if it doesn't work, I'm getting out quickly. All right. It gets pretty ugly as this thing starts to make new lower lows. If you don't feel confident with it, don't trade it. Just like my good friend Jim Rogers says, don't do anything until you know what you're doing. If it moves too fast below 78, sit on the hands. All right? You don't need to be a hero. We make enough money on the easy stuff. You don't need to force the stuff that gets your pulse racing. All right? So I know what I'm looking at for the Russell. I got 3 locations here to be a seller. I've got 2 spots to be a buyer. I will also use those for profit targets. Now you guys on the plan. Again, though, tomorrow's OPEX. Don't force it. All right? Don't force it. I don't want to hear tomorrow you saying, okay, it's going to go lower. I'm going to try this. No. We need to react to the patterns that we see. Members, I'm talking to you guys and gals. You know exactly what I'm talking about, right? We don't predict. We don't predict. The crystal ball we have stopped working a long time ago. So we react. We react to what? We react to patterns. We react to support and resistance. We react to market sentiment at that time. We don't react till we think, right? We try not to think, okay? And I know that sounds crazy, but the less I think, the better I do. All right? Amen to that, right? Preach it, baby. How about the last one here tonight? The black gold here, the Texas T, one of our favorite futures markets. But I'll tell you right now, guys, I am quickly becoming an E-mini trader right now because this crude needs to pick up the pace. Somebody needs to call Ukraine and tell them to get this ish out of the way because it is really dragging down the old crude trading opportunities right now. Slow, sluggish. We know why. We know why, right? Ukraine is a big, big deal for crude oil futures. It is. And we already know there's a lot more wrinkles about this whole soap opera and Putin's shenanigans, right? It baffles me why we have to worry about it so much, but it's because most of us in the Western world don't even understand all the wrinkles and all the nuances and all the different aspects that go into this very complicated situation that's happening between Russia, Ukraine, and the rest of Europe. All right, we got a big, big problem. We get a big, big problem if this crude does not start to break out of this little funk it's in right now. I'm not worried yet. I'm never worried because if I'm not trading crude, I'll trade something else. It doesn't matter to me. The patterns are the patterns. It doesn't matter what market I trade. But, you know, crude oil has this sentimental aspect of it. We've made so much money with crude, I feel like I owe it to crude to stick with it. But at the same time, though, if we don't see this issue in Ukraine start to work itself out here, if we don't see these ranges come back on crude, I mean, we had, I think, 3 out of the 4 days today so far this week were below 100 ticks. There was a couple days last week where the S&P had wider range than crude oil, which is just doesn't happen. It doesn't happen in our world. So we're definitely seeing this slowdown on crude. It's all because smart money, and for good darn reason, are sitting on the sidelines right now because they don't know what's going to come next. They don't know what the next shoe is going to be that drops. In my personal opinion, we should all be thankful right now this price isn't at 105. Anybody who drives an automobile, right, or drives a boat or a truck or anything like that that uses crude oil, just be thankful right now we're not at 105, 107, 110, 115, because a couple of years ago that would have been the case. It would have been at 112, 113, 114 right now. We'd really be hurting as far as filling up your gas tank. Right now on crude, though, as you can see, we got a bit of a wedge happening. We are definitely bullish here right now in the black gold. We got higher highs. We got higher lows, so we're definitely bullish. We're above all the key moving averages. If you look closely here, the longer-term moving average cloud has just turned to green. So now we're looking at the short-term trend was bullish. Now we've got the short-term and the long-term trend. Members, if you're a member of mine and you don't know what I'm talking about, make sure you remind me tomorrow, and I'll go over that with you, what I'm talking about. Long-term cloud has now turned to bullish as well. What that tells me is now we got all the weekly traders, all the swing traders, all the people that were on the sidelines now are now being given buy signals by whatever system they're using. So again, a professional trader doesn't change the game, we game the game. If the game is going to be played like this, we are going to adapt to it. So since crude has had a little bit narrower ranges, we're going to be a little bit more conservative with our profit targets, right? We're not going to get that 200 ticks a day that we're used to getting, at least not right now. So make a small adjustment, use the daily ranges, which we're seeing are very small right now, right? Less than 100 ticks. So if you're trading crude, be aware you're not going to get that 200 tick runner, at least not as often. So be conservative with your profit targets. I've got a bullish trend right now. And what do we do in a bullish trend? We buy. Where do we buy? We buy at a discount. We buy at support. I've got buy here at 101.18, 183, 134, 100.05, and then 99.50 and 99.19. Now, do you recall that VIP chart? Remember the VIP chart? The VIP chart, the first one we looked at, projected us going back to 100. That would put us right down at that low of that wedge. So we're going to have to wait and see what happens tomorrow, but I'll definitely be looking for a buy here at 101.18, target up at the highs. If we blow right through that, buy at 134. If we blow right through that, then you know what's happening. We're going to be sitting there at that prior week low at that 100.04, I think is what it was on that VIP chart. You can check there to see if I was correct on that. Okay, so I got buy, 3 levels here to be a buyer. All right, we're pulling back right now, which is great. We're not at a premium price, right? We're at a discounted price now. So we are on the lookout here now for a rebound and a return back to these highs. Where will I be selling? If we go straight up, I've got 102.65. I will definitely be looking for buying opportunities as we go higher here, and then I've got to take my profit off at this high of this range. Again, this ain't your mama's crude oil, right? This is the new normal for crude oil. So we're not expecting to go pushing higher here too much. So 102.65. I will then be looking for double top, two-step pattern, dragon pattern, whatever the pattern is we can find to get a short. Looking to sell the highs of this range. It will be a counter trend sell. So remember, counter trend, trailing stop, nice tight targets, take the money and run. If it doesn't drop, get the heck out of the way. It'll keep trying to go higher. We're looking to sell this 102.92, and I don't think we get there, but 104, of course, is the high of this range. So I am bullish here right now. I'm waiting for price to pull back into our zones as we go higher. If this happens to collapse tomorrow, we know that 100 even is probably where we go to. If we stay right in the middle, what does Mama say? Don't fiddle with the middle, right? Don't fiddle with that middle. But again, we're at all of the key moving average support here. So if we start going higher here, though, read that market personality. Come see me tomorrow morning in the trade room, and I'll walk you through buying that as it goes higher. We've got 3 spots to buy. I got some great targets overhead. Again, tomorrow's OPEX Friday, so don't force it. Make sure you've got some good personality here before you go taking those trades on crude or any of the markets we talked about today. Guys and gals, I want to thank you so much for being a part of this newsletter here tonight. Once again, don't forget to make sure you navigate over to sidewaysmarkets.com. And while you're there, head on over to School of Trade. SchoolOfTrade.com. Don't forget, my wife Megan and I, we created SchoolOfTrade.com over 10 years ago. We are the premier place on the web to earn and learn. We offer 3 levels of membership. We offer a free trial. Come out and see what we're all about. I would love to have the pleasure, the opportunity to teach you how to get into this great industry safely and profitably. It doesn't take a lot of time. It doesn't take a lot of money. I became a trader when I was 19 years old. 19 years old. So there's no reason why anybody can't do this if they want to. My name is Joseph James. Thank you so much for being a part of the newsletter for you tonight. Don't forget to share this with a friend. Join the trial. Give me a call here in the office if you have any questions, and we'll see you guys here tomorrow morning in our live trade room at 8 a.m. Eastern Time. I don't do the newsletter on Friday nights. I'll see you guys again on Monday evening. All right? Don't forget, tell a friend about this newsletter, and we'll see you guys tomorrow morning bright and early in the trade room. Happy OPEX Friday. Adios, amigos. Bye-bye for now.